Imagine this, you buy some Bitcoin in 2021, it moons, you sell for profit, and suddenly the taxman comes knocking. Most UK crypto investors think it's just about reporting gains, but the truth is, HMRC has a playbook full of rules, and if you don't know them, you're probably overpaying. Let's break this down. First, income. Everyone in the UK gets a personal allowance of £12,570. That's your tax-free zone. But here's the twist most people don't realize. If your total income crosses 100,000, that allowance starts shrinking pound for pound until it disappears. So the higher your income, the less of that safety net you actually keep. If you're a high-earning crypto trader, you might already be losing that allowance without noticing. Now, capital gains. A couple of years ago, you could sell up to 12,300 in profit and not worry about tax. But HMRC has been tightening the noose. This year, the allowance is only 6,000. Next year, it drops to 3,000. That's barely a single ETH trade for many investors, which means more and more people will suddenly find themselves dragged into the tax net. So what can you do? One strategy is tax loss harvesting. Let's say you bought ETH at 3 grand and it's now at 2. If you sell, that £1,000 loss can cancel out part of your Bitcoin gains. Simple, right? But here's the kicker. The UK doesn't allow you to sell and instantly rebuy to lock in the loss. This is called the bed and breakfast rule. If you buy the same crypto back within 30 days, HMRC links the transactions and your tax break vanishes. But there are other reliefs hiding in plain sight. Did you know you have a £1,000 trading allowance and a £1,000 property income allowance every year? That means if you're staking rewards, mining, or even NFT sales are under that limit, HMRC doesn't touch it. Many side hustlers don't even use this because they've never heard of it. For longer term planning, pensions and ISAs are your best friends. With pensions, every pound you contribute reduces your taxable income today, plus your investments, even crypto related ones, can grow tax-free until retirement. ISAs work a bit differently. You can't just drop Bitcoin straight into an ISA, but you can invest in funds or companies linked to crypto, and everything inside the ISA grows without tax. Think of it as a legal tax shield, even if it's an indirect route. And here's where it gets interesting. So if you donate your crypto to a registered UK charity, you don't pay capital gains tax on it at all. So giving actually saves you money. And if you're married or in a civil partnership, you can transfer assets between each other with no tax triggered, which means you can effectively double up on allowances as a couple. For serious investors, HMRC even has government schemes like the Enterprise Investment Scheme or Social Investment Tax Relief. If you invest through them and hold for at least 3 years, your profits could be completely exempt from capital gains tax. Not many people know about this, but it's one of the most powerful ways to reinvest and cut your tax bill at the same time. Of course, all of this only works if your records are clean. And this is where most people get caught. HMRC now asks for up to 6 years of trading records. Every buy, every sell, every wallet transfer. And here's the painful part. Many exchanges don't keep data forever. If you're not exporting your transaction history regularly, you might find yourself with gaps that HMRC won't ignore. So the bottom line is this: you can either spend nights drowning in spreadsheets or use a tool that automates the messy part. That's where Coinex comes in. Connect your exchanges and wallets, let it crunch the numbers, and you'll know exactly what you owe or how much you've saved without losing sleep. Crypto taxes in the UK aren't just about paying up. If you know the rules, they're about playing smart. And that's the real game HMRC doesn't tell you. Head over to coinex.com today and make crypto taxes one less headache.